Hi, Stanley. Welcome to Venture with Grace today.
Hey, Grace. Good to see you again, and thanks for having me.
Amazing. Okay, so to give the audience a little bit of your background, you have joined CapitalG in 2022 as vice president on the growth team, where you lead advisory efforts to help the firm's fintech, Web3, and international portfolio companies scale their go-to-market operations. And so I wonder, so to give the audience a little bit of your background, would you want to share a little bit of like where you came from and like to how you got to where you are?
Sure, yeah, happy to. So, I was born in Nigeria and came over to the US when I was young, and have always really been interested in entrepreneurship. My grandfather was an entrepreneur, and one of my favorite courses at Carnegie Mellon was Intro to Entrepreneurship, and that's also where I first learned about VC. And so, I knew at some point I wanted to steer my career towards VC, but started off in finance at Goldman Sachs, and then from there, I really tried to understand the different paths to get into VC, and I thought that the operator path would be the most interesting and the most fun. So
Mhm.
I left Goldman, joined a startup. I was employee number 10, helped them raise a seed A. They eventually went on to raise a B and get acquired. And Google recruited me from there. So I thought that was a great
Mhm.
opportunity to get into the Silicon Valley ecosystem and network my way into VC.
Mhm.
So that was about 9 years ago. I was at Google for about 7 years as a founder in Area 120, and most recently leading product partnerships for Google Search and specifically Google Health Search, working on everything COVID-19 related. And meanwhile, working with startups to just help them on their pitch decks and help them raise funds. And I started my own angel syndicate and made a number of angel investments. And from there, got plugged into CapitalG because CapitalG was looking into some healthcare companies, and I was on their healthcare advisory board. So
Mhm.
we had an opportunity to develop a relationship before a formal opportunity presented itself. And then when it did, I thought that was a great way to get exposure to the growth stage of
Mhm.
venture versus early stage, and here I am.
Amazing. So I wonder when, like I think previously we chat about like Google has so many different like investment arms, such as Capital G, GV, Gradient, and Corp Dev. Like to give that the audience a little bit of background, since you work at Capital G, would you mind to like share a little bit of like the differences between like each venture arm? I know that you guys are focusing on like growth stage, and then you in particularly do a lot of like partnerships or like basically helping the portfolio company to kind of like partner with Google's resources. And I personally, today I wore like a Stripe t-shirt, by the way, just to like support like your portfolio company. We're so
I love
it's like, but anyway, so I would love to learn more about like, for example, let's say a Stripe, like when they, when you guys invest in them to eventually, you help them to partner with the basically the partner with like Google's team, like how does that look like?
Yeah, sure. So first, I completely understand that there are so many different arms of Google and Alphabet that touch the startup ecosystem. So I'll give an overview of Capital G and then kind of tell you a little bit about the differentiation between the different groups that you mentioned. So Capital G is Alphabet's independent growth fund. And by that, I mean two things. One, we are not a strategic investor. So we're not looking for any type of alignment with Google's products. We're not looking for our portfolio companies to use Google products. We invest in growth stage companies that have already found product market fit purely for financial return. So you can think of us like any
Mhm,
other traditional VC firm.
mhm,
And what makes us unique is that because we're writing very large concentrated checks of
mhm,
50 to 200 million, we're only making a few investments per year, let's say 5 to 10 new investments. And we partner extremely closely with their CEO, their founders, and their C-suite to help them
mhm,
accelerate their growth. So that can look like, one-on-one bespoke engagements where we're connecting them with product experts at Google DeepMind to help them develop, their AI technologies, or it could be
mhm,
something more scaled like our security assessment program where we partner with Google's security red team to help identify
mhm,
any potential vulnerabilities and come up with remediations for them. So it can take any number of different flavors of support. But
mhm,
I specifically focus on our product and tech
mhm.
advisory efforts as well as leading some of our programs. So that's capital G. We're growth stage. We're coming in series B and later, large checks, fewer checks. And then you have GV or Google Ventures, which is an
Mhm,
earlier stage fund, and they'll invest anywhere from C to B. But what makes both of us unique is that we have only one LP, and Alphabet is
mhm,
that one LP. And the benefit of having Alphabet as our sole LP is that we can take a very long-term view of our investments, and we can
mhm,
help connect them to the people, learnings, and resources of the Google and Alphabet community. So you have capital
mhm,
G on the growth side, GV on the earlier stage side, and then Corp Dev, which actually sits within Google and is purely a strategic investor. So they can fully acquire companies like Looker. Looker was a
mhm,
capital G portfolio company that was acquired by Google. That's not our
mhm,
goal, but it does happen
mhm,
sometimes, and that's kind of a
mhm,
win-win for everyone.
mhm,
But they are definitely the strategic investment arm of Google. And then Gradient Ventures is an early
mhm.
stage AI focused fund. So that's kind of their niche.
Got it. I wonder, is there any kind of like internal, like, I guess, like, are they all like internally connected to a degree? Like, let's say, is there like an annual AG, like annual general meeting for like everybody within the Google ecosystem in the investing zone, or like how do they function together like at all?
I'd say we are all pretty independent
Hmm.
with some crossover. So, Capital G is a completely separate legal entity from Google and from GV. We have a separate investment committee. We look at our investment landscape uniquely. We're extremely thesis driven. And so, we operate as a solo fund, but
Hmm.
we do collaborate in the startup ecosystem. So we'll often be speaking at the same events, or we might be I sit on the selection committee for the Google for Startups AI Accelerator and for the Black Founders Fund, and there are folks from GV and on that committee as well. So we do overlap in support of the startup ecosystem, but
Hmm.
we're pretty independent when it comes to our investment process.
Totally. I wonder when you're thinking about, let's say if today I'm a AI startup and then I'm trying to, get evaluated by capital G, like can you share more about like, what's the evaluation process? We could use an example that's like public, or like we could just use like some like imaginary example. Let's say I don't know, like a runway ML equivalent or something, like if they want to partner with capital G, what does the process look like? And then what do you need to pay attention to when you're doing due diligence? We could talk about like the thinking framework than like specific like exact metrics or whatever.
Sure. Yeah. So I think from a investment standpoint, generally, Capital
Mhm,
G is very thesis focused. So we have four GPs. Each general partner has their own focus area and investment team, and they'll really do deep thematic work on that space and come up with a point of view on where they want to focus. And then from there, kind of look at the entire landscape and identify which companies they believe will be the winners, and then start to go deeper into the diligence process with them. We look at things like LTV to CAC as a measure of
mhm,
business health and efficiency. We look at net dollar retention. We look at growth rates. But yeah, we want to make sure that the companies that we're invested in have some kind of unique value proposition and defensibility. And when it
mhm,
comes to AI, I think we're a growth stage fund, but one of the things that I mentioned is that having Alphabet as our sole LP gives us a lot of
mhm,
flexibility, and by that we've actually gone earlier in AI. We made a
mhm,
Series A investment in Magic AI, which is developing
mhm,
some really really cool, powerful, differentiated technology,
mhm,
and we made a bet on them because the founders are just incredible. They have such high intellectual horsepower. The product that they're building is something that we believe can really be generational. And
mhm,
so, working, we have partners. Our partner Jill Chase, she has gone really deep with Eric, their CEO, and have become a really trusted advisor to him. And
mhm,
so that has allowed us to get into deals that are really competitive, right? I think the best deals often have multiple term sheets and have all
Mhm.
multiple offers. And so part of what my team does on the growth side is actually deliver value in
Mhm.
addition to the capital.
Mm. I wonder when you are thinking about like, when let's say like is there any special things that Capital G are looking for in terms of investments? Because, as a traditional growth fund, they didn't really have much of a value add such as, the entire Google ecosystem that they could kind of like leverage on. I wonder, is there any specific like things that you're looking for the companies that you think Capital G could add a lot of value to generate, like, better financial return?
Yeah, I think obviously companies that have found product market fit already and can
Mhm,
use a large amount of capital, 50 to $200 million plus to
mhm,
fuel that growth. And
mhm,
we're not a strategic investor, so we don't really look for startups that have Google products in their tech stack.
mhm,
But if they do, that's where we can offer some really specialized value. So
mhm,
we partner very closely with cloud, and we have a really strong cloud co-selling motion. If we have startups that are building on Google technologies, we know exactly who that expert is to kind of help them on their journey. We can help unblock issues, but we also try to do the same with other companies. So we have contacts at Microsoft and OpenAI, and we connect our portfolio companies, to whoever can help them, right? Because at the end of the day, we're just looking for them to excel, and the
mhm.
better they do, the better we do.
Totally. What does a process look like when, let's say, you have invested in a company, and how do you evaluate, like, which internal, like, um, value add department that you could kind of, like, partner them with? And how does conversation started happening within the, ecosystem in general?
Yeah, sure. So the process actually begins for us pre-investment. Like I
Mhm,
mentioned, we are a thematic based fund. And so
mhm,
we'll come in with a view on how Capital G can add value to that company before we even talk to them. And that really helps us to stand out as a potential investor because we're really being thoughtful about their space and what we can do to help them on their growth journey. So we'll kind of give them a taste of what we can do pre-investment, and then once they come on, fully and we've closed on the deal, then the growth team, so myself and the others on the team will meet with the CEO and have a
mhm,
kickoff call where we'll ask them what their, top priorities are. We'll share with them kind of a preview of the different areas of support, and then we'll align on the most impactful work stream. So we'll say, hey, CEO of X company, here are the three things we think can help move the needle for you. Does this resonate with you? What's your priority in terms of product for the year? Do you have any key
mhm.
hires that you're looking to make? Where can we be most helpful to you? And then once we have that alignment, then we'll work in follow-up sessions with their CMO or their chief product officer or whoever is kind of responsible for that work stream, and then start actioning on those items.
Totally. I wonder, is there I guess, like, how fast can these, like, partnerships start implementing? Because, after all, I feel like any big company have a lot of, like, processes, like, in between each department, and, like, just overall it takes a while to, like, implement something. I wonder, let's say if, Capital G invests in company X, and how long does it, like, let's say, like, if they want to partner with, I don't know, Google Brain, and, like, how does I guess, like, how long does it actually start from, like, start the conversation starts to eventually the partnership start happening? And how do you guys, like, evaluate, like, the KPI, or, like, set up a KPI for, like, if the partnership is successful?
Yeah, really great question. I think it varies significantly. It can
Mhm,
be same day in some instances
mhm,
to
mhm,
I've worked on really big,
mhm,
complex opportunities that might take 12 months. So,
mhm,
one example on the short side is we always have startups that want to get early access to the latest Google AI technologies like
mhm,
Gemini, Gemini Ultra, Gemini Pro,
mhm,
Palm, MedPalm, and So one thing that I have had the opportunity to work on is building a relationship with Google DeepMind such that we can have a program in place for early access for our portfolio companies. So we don't have to start the process from scratch each time for each company. We've kind of established a relationship and the operating model. And then as soon as companies come on, we can kind of put them into that program. So, we had a couple startups just last week that we got early access to some new cool technologies, and that happened, I think, in 24 hours. So, the
Mm,
work that we do throughout the year helps us to operate
mhm,
really, really quickly down the line. And
mhm,
then if it's something that's more bespoke, like I mentioned, the bespoke engagements for one company, that might take a lot of time getting buy-in from the right execs at Google, working with
mhm.
legal, working with the different teams that are, decision makers. So it really varies.
I wonder when you are thinking about like investing from an early stage standpoint, because I know that you've also done some like angel investing. I don't know if you're still doing it now, but like I wonder when you're looking at the more earlier stage of the companies, like how has like working at Capital G kind of shape you into like your current, I guess, like investing thesis? Like, is there anything that in particular you feel like has great potential to become like a bigger company uh right now?
Yeah, so I've been early stage investing for a while, and I really love that space because I think there's a different level of energy and excitement when they're still pre-product market fit, right? I think
Mhm,
the evaluation process for an early stage company is much different than a growth stage company that has been around for a couple of years, might have $100 million in ARR plus, has processes in place, and is really just looking to scale because they found what works. And for me personally, I try to stay in areas that I know. So
mhm,
having a fintech background, a health background, I try to invest in those spaces where one, I can diligence the deal better, but
mhm,
two, I can actually add value as an angel because, like I mentioned earlier, the best deals are competitive. So I have
mhm,
to pitch myself in order to get
mhm,
on their cap table. And one company that I'm really excited about right now is called Kudos,
mhm,
Kudos. Tikwe is the founder. I've known him for years. He was an ex-Googler, went to a firm, and now started basically it's like Honey,
mhm,
the web app, but
mhm,
for credit card reward points. So you can kind
mhm,
of think of it as like the point guy, but automated. So it's
mhm,
a smart wallet that will basically pick the best credit card for you as you're checking out to maximize your points. And as someone
mhm,
who pays a lot of attention to points and trying to get airline status or whatever it is,
mhm,
I personally find it really useful. And
mhm,
that's a unique case where I know the founder, I use the product, and I think that they've shown great progress in terms of user adoption, product maturity, and fundraising. So that's a one that I'm excited about in my personal portfolio.
Totally. Wow, that's like sounds really exciting. I wonder when you mentioned like you have known the founder for a while and like they obviously have a really amazing track record. I wonder like for the companies that you find like interesting, but like you've never really worked with them or like having a personal relationship with them, like what are ways that you use to kind of do the due diligence for the product or the company? Also, I personally feel like because we live in Silicon Valley, there are a lot of highly technical talents in the Bay Area. So, like, basically, a lot of people have really strong technical mode. But in terms of like building a successful product, how do you evaluate if the founder can, quote unquote, pull it off?
Yeah, that's another really great question, and I think sort of concentrating in a few key areas, I've been able to develop a network over the
Mhm,
past 15 years. And so I've actually had at least a couple second connections with founders. So that
mhm,
makes it easy to do reference calls. And, you can ask about what it was like to work with that person if they worked at the same company or, how they would rate them in terms of the best people they've ever worked with in the top 1%, 5%, 10%, what they think about the product. But also, I really do try to at least meet the founder, especially
mhm,
for early stage companies, because the team is so important. and
Mhm.
I'll advise them. And honestly, I'll use that as an opportunity to learn more about the product, but two, get a sense of how they respond to feedback and how quickly they're able to execute. So if we meet 1 month and then they tell me their plan for the next 3 months, and then we meet again in 3 months, like, have they done what they said? Have they done more than what they projected? Have they done less? Like, I'll use
Mhm.
that as informal feedback as in addition to the reference checks.
Totally. I wonder when you are thinking about like deal sourcing as and like when you are like angel investing, um, how do you create like a pipeline for yourself? Because I think it's easier to like invest in that like one friend who has been like, showing some really amazing uh just like uh ability to execute or like just like they looks like a great founder, but like I think it's really hard to have a repetitive kind of a pipeline. And I wonder how do you kind of like formulate that for yourself?
Yeah, so I personally just love startups and
Mhm,
advising. So I've been doing it for years, just because it's interesting to me.
mhm,
And while at Google, I would try to be involved with anything startup related. So back in 2018, I was a startup success manager for Google for Startups Accelerator when it was called Launchpad at the time.
mhm,
So I spent a month in Nigeria and in Kenya working with sub-Saharan African tech startups, just advising them and
mhm,
helping them to connect to Google's resources. And I got to meet a bunch of really great people there as well, founders, accelerators, and other VCs, and have
mhm,
kept those relationships. And I've gotten some deals from that. I also, like I mentioned, sit on a couple of selection committees for Google for Startups, Google Cloud for
mhm,
Startups. I'll do office hours for VC firms like Antler. I speak at conferences. So I've spoken at the Stanford Africa Business Conference, Wharton Africa Business Conference, and just try to be a part of the ecosystem and be open to meeting new people. And
mhm,
as I share what I'm interested in, like, the opportunities sort of come and find me. So
mhm.
I've been referred a couple of really great deals, and that's just because I've developed relationships over the years.
Totally. I wonder, you have also invested in some amazing companies in the secondary market. Would you want to talk about that on like, how do people get into like investing in basically the secondary market and like you obviously have invested in some like superstar deals, basically how do you get into these deals and what should people look for and what were some like kind of like challenges or things that like you were not imagining happening when you were doing these deals?
Yeah, so I think for me, some of those deals were just pure luck, and some of them I was able to find strategically. On the luck side, again, it just goes back to having relationships and real friendships with people. So when I was building my own company in Area 120, it was a startup that connected African tech startups to funding and expertise in the
Mhm,
diaspora. So it was a two-sided platform. One side was virtual mentorship, and the other side
mhm,
was an investment platform with a lower minimum investment amount. So $1,000 could help you get into a deal that was, a YC company, for example.
mhm,
And one day I was just working with one of our advisors for that company. And he was a serial entrepreneur. He's an angel investor. He does a bunch of really cool stuff. And he told me about a deal he was in for Robinhood. And I was like,
mhm,
oh, wow, how did you get into Robinhood? And he just happened to
mhm,
know somebody and had access to a deal. And I was like, hey, is it possible for me to join you? And he said, yes. And so that's how I got in. It just like a random conversation one day. And if I hadn't been speaking with him that day and he hadn't been thinking about the deal, I might not have had an
mhm,
opportunity to get in there. So
mhm,
sometimes it's luck. Other times there are platforms like microventures and
mhm,
Forge that list pre-IPO opportunities. So they'll list companies like, I think I saw OpenAI and Anthropic on one of those
mhm,
platforms recently. So that could be another way to have like a vetted um, deal that's kind of like sourced for you and presented to
mhm,
you in like a nice user-friendly way.
mhm. So you said like microventure and what was the other one?
I believe it's called Forge. They changed
Or
their name.
oh, yeah, I think you mentioned last time. I'm sorry. I like I have a mom brain right now. I forgot everything right on the spot, but That's great. Like I wonder when you're evaluating what secondary to buy, like is there some kind of like thinking system? Like obviously like OpenAI or like Anthropic, it's like great. But the problem is like, if you're building a portfolio, it should be a portfolio than, the one or two bets, I guess. Like I guess how do you kind of like also manage your own asset as like a solo manager for your own asset? Like, how do you kind of like think about creating a portfolio for yourself to balance out the risk? But yeah, and then because do you position yourself as like the high conviction model or like you only shop for like the couple really obvious success ones or how do you kind of like allocate your own asset?
Yeah, so I go for high conviction
Hmm.
in the founder or founders, in the team, and in the marketer space and in the product.
Hmm.
So in most cases, I either know the founder well, I've worked in the space, I use the product, um, or I just love the space in general.
Hmm.
And I think personally, one piece of advice I'd give to anyone who's thinking about angel investing is
Hmm.
to be really realistic about your own risk tolerance and
Hmm.
personal horizon timeline, because these deals are very, very long term. The capital that you invest, you might not get back for 10 years, if at all, right? Like you can lose all of it or you can make a ton of money. And so only invest what you're willing to lose and what you won't need
Hmm.
for several years.
Hmm.
But one funny story, when I was working at Goldman, I one of my friends was Fred Ursum, one of the
Hmm.
co-founders of Coinbase, and
Mm.
we were in the same Hamptons house in summer 2011 or whatever it was, and we'd go there every weekend, and Fred would be talking about Bitcoin and all of this stuff, and I was like, "What are you talking about?" Like, it didn't make any sense to me,
Mhm.
but I knew he was smart, but I didn't invest in Coinbase, and that would have been a killer deal. So
Mhm.
I told myself, the next time someone that I know that I worked with that I really admire and think highly of starts something, I'm going to
Mhm.
seriously consider it. And so that's
Mm.
why I've invested in founders that I've either worked with before, or I
Mhm.
know personally, and I know how they execute and how they think.
Mhm.
But yeah, again, I don't invest in things that I don't understand. So I don't do
Mhm.
like aerospace, I don't do
Mhm. Mhm.
defense, I don't do a lot of hardware because that's
Mhm.
just not what I've worked with and what I can really diligence properly.
Mm. I feel like I totally feel like what you're I think, like, I guess, like, I have a couple questions there, like, one is, like, I feel like in Silicon Valley, it's easy to have smart friends because of, like, everyone's kind of smart nowadays, and, like, I wonder how do you pick that deal? So, like, when you were saying, like, let's say you met the co-founder of Coinbase and then you didn't invest, I'm sure there's, like, a reason there, like, that's maybe either, like, crypto market wasn't really a huge thing back then and there's like so much risk going on. I wonder, but like even a person's talented, but like the market looks very questionable. It could be like something that like, stop us from like investing. I wonder, um, I guess, like, how do you when you say, like, you invest in things that you understand, I personally cannot understand everything, right? Like, so but, like, a lot of the most money-making project are not in the sector that I personally understand, and, like, I'm not saying, like, we need to invest in, like, aerospace all the time, but, like, even for, like, fintech apps, like, it's not something that, like, you know, you personally would use to make it, like, a good app, um I wonder, like, number one is like, how do you filter out, like the smart people in the first place? And then number two is like, if you don't understand a product, I don't know, I know that you invest in like Impossible Food. I would totally invest in Impossible Food if I have the chance, but I'm also a meat eater as like I mean, I don't think I understand fully about the science behind the product, but I do feel like it seems like a good investment as like other people who I feel like there's a market for it, basically. I wonder how do you think about these two kind of like I want to say challenges, but like just things that to consider. Like number one is like so many smart friends. Who do you invest in? And then number two, it's like, um, if it's something that like you don't know, but like it's like kind of like seems like a good market, how do you kind of evaluate if it's working?
Yeah, so like you said, there are so many smart people that are extremely talented in what they do, especially, at some of these big tech companies. And so one way that I filter is I look for who have done almost the impossible, like something that if you looked at it from the outside, you'd say like, this is not possible to do, and they
Mhm,
found a way to do it. Or somebody who's like really navigated something that was ambiguous and gnarly and made it a success.
mhm,
Like those are really strong traits that I look for.
mhm.
And people who have like this level of humble confidence, and they just
Humble
execute.
confidence.
Yeah, they just execute and get stuff done, um, quickly and boldly, and they're not afraid to think big and go after big projects. So that kinda gets me excited because they have like a level of energy that, they'll run through walls to make something happen. So
Mhm,
that's
mhm,
because, start entrepreneurship is difficult. It
mhm,
gets really, really tough sometimes. It's a
mhm,
grind.
mhm,
You'll have ups and downs, and so it takes a certain mentality to be able to deal with all that and handle it well and actually enjoy it. So that's
mhm,
part of what I look for in terms of friends that I've invested in before.
mhm,
For companies where I don't necessarily know the founders super well or I haven't worked with them, I'll often look at the strength of the referral.
mm,
So someone who really knows this space, refer this to me because
mhm,
I can kind of leverage their expertise and ask them all the questions that I don't really know or
mhm,
understand. So, in
mhm,
the healthcare space, like I have, all my siblings are doctors. I have a bunch of doctor
mhm,
friends,
mhm,
just through some of the work that I did for Google Health. And so I'll ask them, like they'll be my advisors as I'm diligencing some deals. Like, hey, what do you think about this technology? Like, does it have legs? Do you think it makes sense? Is it going to be a winner? Um, and so, like, the strength of the referral also to me means, who's already on the cap table, right? So if it's a
mhm,
later stage deal, do they have tier one VC funds on the cap table? Did they go through a YC or some other type of accelerator? Did they go through any Google programs? Because I could also, talk to
mhm.
the folks who worked with them and try to get a sense of, what they thought about the company and about the product.
Mm. When you are like doing the due diligence, how do you start the conversation? Let's say I want to chat with, let's say, like a YC founder or something. I'm sure, like by this time, because of your job, you already know some people. But I guess, like when you're starting out in the like at the beginning, like how do you build out this ecosystem that you can do reference check? I feel like it's really hard for like a younger person or like I don't know, like more junior associate to kind of like have a reference check with like other YC people or, basically like higher level folks. So I wonder how do you kind of like do the reference check when you don't have that much resources?
Yeah, great question. I would say you can be scrappy, right? Like, don't be afraid to cold LinkedIn message somebody.
Mhm,
And, something that someone told me was that it's helpful to get insight from former, employees or
mhm,
former, managers because
mhm,
they can kinda give you a more unfiltered perspective on
mhm,
someone. So if you see, okay, this person worked at this company, perhaps you have a mutual connection, just reach out to that person and ask like, "Hey, I met or I'm thinking about investing in so and so, like, what was it like to work with them?"
mm.
Like,
But
what
what
do you.
if let's say if you're like a small tech angel check writer and then without like obviously like, I feel like I guess, like, without much of, like, a background, like, how do you like, if I randomly reach out to you, Stanley, like, can you give a reference check for this guy you have managed before? And you would be like, "Why would I tell you what I think of, like, this person?" Maybe you're even closer to this person that even maybe you guys are not best friends, but, like, maybe, like but, like, you're still closer to that person than, like, me, a random stranger on the internet. I wonder how do you kind of, like, balance out that kind of weird dynamic if you're randomly reaching out to someone.
I think it's actually less weird than we all think. It's
mhm.
like asking for help. Like, a lot of people feel shy about asking for help because they don't wanna bother someone
Yeah.
else, but
Also, I think another, like, social challenge is like, "Oh, I'm, like, putting in a tiny check," compared to, maybe they're doing, like, a deal with, like, a tier 1 or 2 VC firm already, and then, like, a small angel investor come in to be, like, doing these, like, thorough background check to, like, their previous managers. Will they just, like, think you're crazy to not let you on the cap table, or how do you kind of evaluate that?
yeah, so, I mean, you have to be tactful about it, right? Like, if you're a small check,
Mhm.
don't take up a bunch of the founder's time because
Yeah.
you're a small check in the round. So, I think it's completely fine to do your due diligence, and it just shows that you're invested in the deal and
Mhm,
in the company. So, I think it's completely fair to ask any mutual connections that you might have,
mhm,
about them or about, like, the product itself because you're just looking to learn more.
mhm,
I think if you're
mhm,
really just starting out,
mhm,
syndicates can be a good way to go because there's
mhm,
usually a deal lead, and that deal lead has done a lot of the due diligence and can share that information with the syndicate or the collective. So, I'm part
mhm,
of the Black Angel Group, BAG. We have an entire deal team that sources deals, that vets deals. We'll have calls with the
mhm,
founder, and so that way, the founder's only speaking with the group once, but everyone has an
mhm,
opportunity to join live or watch the video afterwards and ask questions that way. And even if you don't have a question yourself, you can hear the
mhm,
questions that other people are asking and learn that way. There are also a number of
mhm.
different alumni syndicates. Carnegie Mellon has a syndicate called 99 Tartans. And so they have deal flow that way. That's a good way to get started if you don't really have a strong network yet.
I wonder, like, I'm literally taking notes. I wonder when you are in these like different groups, like number one, it's like how do you kind of like split your personal resources or like man time? Because you just mentioned like literally there's like your school group and then there's like the back group and then there's like the work thing and there's like like other friends or something like the former, I don't know, founder of Coinbase or something. So I wonder like among these, like, different groups, like, how do you allocate your time, and, like, how do you evaluate which one, like, matters the most for you in personally? And number 2 is, like, also, like, you mentioned about, like, Area 120, like, can you like, I would love to, like, learn more about what does that entail to be, like, a part of that.
Yeah, so I think it really ebbs and flows, right? I think
Mhm,
when I was in a season where I had a little bit more bandwidth,
mhm,
because I wasn't starting a new job or, I wasn't becoming a new dad. I could spend
yeah,
more time and energy diving into these groups, and
mhm,
so I the good thing about being a part of a syndicate is that it's deal by deal, right? So you don't have to
mhm,
participate in every single deal. You can just
mhm,
focus in on the deals that are interesting to you. So
mhm,
I would watch out for deals that got me excited, and then I'd go deep on that deal, and I would join those calls, but I wouldn't join every single call, all the time,
mhm,
and
mhm,
I wouldn't do research on every company that was presented,
mhm,
because if it's kind of outside of my areas of focus, I could just kind of
mhm,
auto filter that. And
mhm,
in terms of, work and balancing time, most of this stuff that I do in terms of angel investing is on nights and weekends. So it's like,
mhm,
how late do I want to stay up that day? Like,
mhm,
what do I have going on this weekend? Can I block out 2 hours to actually do some work on this opportunity? So it really ebbs and flows depending on what's going on in work and in personal life. And then
mhm,
Area 120 was a internal accelerator for
mhm.
Googlers. So you can kind of think about
Mm.
it as a YC inside of Google.
Oh my god.
And
I like that Google just have everything in the house.
yeah, it's a big place, and it's a special place, and I think it's really cool to give people an opportunity to
Mhm,
launch something themselves and to build it
mhm.
out within the safety net of Google, right? So
So
you're
does
you're there.
Google take, like, 7% of whatever you're building? I'm just
Google
kidding.
does
I
take a percentage of whatever you're building.
okay, but, like, so basically it's like an in-house YC, so you can, like, literally you can apply to be in, like, it says, like, apply like, is everyone gonna get in because they are already working at Google or, like, it's
No, I
like
think it's about a 3% acceptance rate.
Oh
but
my
you can
god.
apply
You guys
online and
were
then
already at Google? Like, you
you
wanted to get into Google, I see. That's insane.
Yeah, well, it's because it's there are so many people that are entrepreneurial and they, like, wanna do cool things and they might not have an
And then
opportunity to do it in their
do
day
they,
job, so they
like
wanna, like,
but
apply.
do they, like, create a company in their work time, or how does this work?
Yeah, so Area 120 was founded based on the concept of, like, 20% time, which is something that's pretty unique to
Okay.
Google.
Yeah, yeah,
So
yeah.
Googlers have the opportunity to spend 20% of their time doing
Work
something that
on
has
yeah.
nothing to do with their core job. Area 120 is, 120% of your time because you're, like, in
Oh
this
my god.
full time, and I mean, it's really like YC. So you leave your job if you get in, like, you pitch kinda Shark Tank style, there's a
Mhm,
bunch of partners that will assess the application, and then if you get in, then you'll get funding from Google,
mhm,
you'll get headcount, you'll get office space, and, like, you really can build out your own company right there, and
mhm,
that's what you're living and breathing every single day. So it's
mhm.
you kinda you could say goodbye to your old job and, like, you go all in on this.
Oh my god. I'm sorry, but, like, what? And do you guys have, like, partners or something there, like, to who is selecting these companies? It's not like all the Google venture arms people are like, "Oh, chip in sometime to, like, help with the selection of the entrepreneurs?" And is there any, like, iconic deal coming out of this?
Yeah, so the partners, there were a number of partners that came from Google, like senior product directors, senior folks from corp dev, folks in the startup ecosystem. They are the selection committee, and then they'll also work with the startup. So they'll have like a number of companies that they're assigned to that they serve as like the primary advisor to.
Mhm.
And then your second question was, sorry, could you remind me what the second question was?
Yeah, like, is there, like, a unicorn or something coming out of this? Or maybe this is, like, too early to have a unicorn that could work too. I wonder if there's some company that I know actually coming out of this.
So I don't know if there have been any unicorns coming out of it yet because the model basically the graduation path is more exiting to Google, so getting
Oh,
acquired by
okay.
Google's product area.
Okay.
Area 120 didn't really encourage external exits.
Got
However,
it.
there
Yeah.
has been one external exit, and that was pretty cool. It's a company called Byteboard, BYTE board, and they basically have revolutionized the software engineering interview process by making it
Mm.
more realistic, right? They actually give you a project that tests the day-to-day skills that you'll need to complete a
Mhm,
task, from like scoping the project to
mhm,
executing to explaining it to cross-functional partners. That's another CEO that I think extremely highly of, Sargon. She and I were in Area 120 at the same time, and so I got to
mhm,
watch her do the impossible and
mhm.
really build out something cool. So yeah, I'm excited about that company as well.
Oh, wow, that's so crazy. I didn't even know that, like, exists. But I wonder when you're, thinking about, like so you also went through the, first round track, and I wonder, um what does that look like? Because a lot of the listeners are like emerging, like, investors, and they are also considering joining these, like, angel squad or like these other like angel tracks. I wonder, like, what does the process look like for you guys in the angel track, and um how does that like kind of like affected how you function as like an investor?
Yeah, so first round capital is a tier one,
Firm,
top
yeah.
early stage VC fund. They really
Mhm,
strive to be your first check. So
mhm,
they're focused on seed, Series
mhm,
A, early stage companies, and they have an incredible program that I loved being a part of, and it's basically like a 8 or 10 week curriculum where you'll meet for a number of hours a week, and you'll go through different topics as it relates to becoming a stronger angel investor. So one week you might talk about you know founder assessments, like what questions to ask founders, how to assess founder strength and founder skill sets. The next week might talk about, product due diligence and how to think about, user journeys and how to think about like the strength and the differentiation of the product.
Mhm,
And what was so helpful about Angel Track is that they're pretty transparent about first round capital's process and how they think about it and how
mhm,
different partners can
mhm,
think about the same topic from different lenses.
mhm,
So, I remember we had a number of guest speakers that came in, and some folks looked for founders that spike in one or two areas that are just like head and shoulders
mhm,
above everyone else in one or two areas. Other investors look for founders that are strong across the board in a number of
mhm,
different categories. And
mhm,
just understanding that there are multiple ways to look at the same thing, that was really eye-opening for me. And they brought in really high power, well-known speakers like Elad Gil came and spoke to us, and
mhm,
that was just an incredible opportunity because how often do you get to meet someone like that? So I really
mhm,
enjoyed it, and the network continues even after the program
mhm,
formally ends. So we have a Slack group, we have events, we try to meet up, we share deals with each other. I've
mhm.
invested in some deals through that, and so yeah, it's a really great program if you're looking to kind of hone your own investment thesis and process, and
Mhm.
become a better angel investor.
Mm. I wonder when you are I guess, like, when you are, do you guys, like, invest deal right on the spot within this group or, like, just people share, like, kind of, like, offset after, like, you meet 5 other angels and then you guys kind of, like, share the deal flow? Or is there any, like, organic deal flow coming out of this program?
I'd say there's both, right? So someone might meet a founder or know a founder pretty well, know that they're
Mhm,
raising, and then send it out to the group in our
mhm,
email alias. And so, if you're interested, they can make an introduction to the founder. They can be that reference check for you and kind of tell you a little bit more. So we have deal flow that way, but then also there are other entrepreneurs that are a part of Intertrack. And
mhm.
so sometimes they are raising for their own companies. And so you might have an opportunity to partner with them there.
Totally. Do you so I guess, like, how do you kind of, like, study the current ecosystem when you are evaluating your own angel investment? Like, do you let's say every Saturday you set a set of, like, I don't know, 5 hours or something to, like, watch, I don't know, Andrewing's AI course or whatever on Coursera. How do you kind of, like, study the trend? And then also, like, how do you set a part of the times to improve, let's say, like, the current job? So for example, like partnerships related things, like, I guess, like, what and also, like, what are the core skills you feel like can that has to be learned to do, what your current job is?
Yeah, so I read a ton of articles. I feel like every day whenever I get a chance, I'm reading about, an
Mhm,
industry, a company, market trends, just trying to
mhm,
learn continually. I have the privilege of being able to connect with like top experts in the space through my day job.
mhm,
And so sometimes, if I'm introducing one of our portfolio companies to an expert, I might sit in on that call, and that's actually a great
mhm,
learning opportunity for me, right? So as they're
mhm,
learning, I'm learning as well. So
mhm,
I get some kind of natural growth through that, but
mhm,
I'll also just kind of read up on something. So, AI is something that I find pretty interesting. So anything that gets announced, I'll kind of like try to understand one or two layers deeper in it. So
mhm,
like when it comes to something like embeddings, like what are embeddings, like let me just find a paper on it and read a little bit more so I can be knowledgeable about it. So that's my approach. When I was just getting started, I think something that's helpful is being able to just understand the terminology in the
mhm,
venture space. And so I read books like Venture Deals
mhm,
by Brad Feld. I read books like The Lean Startup, The Hard Thing About Hard Things. So all of those classic startup and VC books are helpful just to help you understand like the process, the language, um, and then for me, I'm on the growth side, so I help our companies grow and scale, whether that's product and tech advisory or forming partnerships with Google or other companies. And
mhm,
I think listening is a key skill for me to right to understand
Mhm,
what someone's needs are, like what they're saying and like what they're also not saying, like
mhm,
being able to read in between the lines and
mhm,
understand motivations, right? Because if you're trying to negotiate a partnership, you need to understand what each side wants and what each side sees as valuable. So
mhm,
you can come up with some kind of mutually beneficial arrangement that makes
mhm.
everyone happy. So that's kind of like one of my core skills that I leverage.
I wonder, I have a couple questions. One is like when you're forming these partnerships, like how does the process look like? Like you mentioned, like, listening, basically you chat with each side and then see what they would want to get out of the situation. And like I'm sure there's like times that are like, oh, they're perfectly aligned, but sometimes they're not, like because I think for startups, of course, they want like as much resources as possible, but like, as a bigger entity, there's a let's say there's 5 AI company this year that that may be like meaningful or whatever, like they're all fighting for the same, I don't know, like the deep mind group or something like so basically they're all fighting for the same resources. How do you kind of like manage the just like really intricate like relationship if there is any kind of like situation that was like that? And the other part is like, um, there are a lot of really sexy startups. I don't know if you like, I mean, I feel like you're perfectly happy with Capital G, but like a lot of the listeners may want to join like AI startup or something that's like more in the earlier stage. How do you advise people to evaluate which company to join? And obviously, like not everyone have like open air or something in front of them, but like how do you identify if this thing would be an open eye when you first encounter them in like a very early stage?
Yeah. So to answer your first question, I try to build relationships before I need something from someone. So,
Mhm,
with DeepMind and Google DeepMind, we have a senior product director on our advisory
mhm,
board, and I lead
mhm,
Capital G's advisory board. It's a group of about 25 to 30 directors and managing directors
mhm,
across different product areas at Google. So we have a
mhm,
natural touch point to build a relationship with them, and we do
mhm,
things that add value to them, both
mhm,
as individuals and for their orgs. So we offer
mhm,
different types of professional development opportunities for them, networking opportunities, and so that gives me a natural way to have a conversation and understand what their org's priorities are, what their OKRs are, what they're focused on, and then I
mhm,
will navigate our portfolio and find opportunities that fit what they're looking for, so that it's
mhm,
a win-win there.
mhm,
And then that way, there's trust that gets built up, there's goodwill that gets
mhm,
built up, and then if I need something that's somewhat outside of their core priorities, they're more than happy to do it because we have a solid relationship, and I've done things that have helped them as well. So it's kind of like we help each other. And then in terms of joining a startup,
mhm,
I think that's the biggest investment you can make, right? If you think about
mhm,
it, if you're not writing a check, you're investing in them with your time and your
mhm,
career. So that in itself is an investment. And I personally like to look for companies that have a mission that resonates with me.
mhm, mhm,
And so the truth is you don't know what's going to be a unicorn, right? Like even
mhm,
VCs don't know 100% of the time what's going to be a unicorn. So
mhm,
it's hard to expect anyone to pick a company and say, yes, I know for certain this is going to be a decacorn or something. But
mhm,
if you join a company that like you're aligned with their mission, you're excited about what they're doing, and you really respect and admire the leadership there and the culture that they've
mhm,
built, and during the interview process, you're actually interviewing them as well and
mhm,
trying to get an understanding of like, is this a place where I can really see myself thriving? Is
mhm,
this company solving a really big mission that's important? And are they solving a need, like a real need, or is this kind of a nice to have, not really, not a defensible type of business?
mhm,
So those are things that I would look for. And then
mhm,
again, you can take signal here, right? Like is this company, have they gone through a Y Combinator? Have they been invested in by top VC firms? Because that's going to help their ability to attract even more talent and perhaps even more funding down the line. And so those are some of the signals you can look for. You can also look at things like their growth rate, depending on how early they are. Like you can just
Mhm,
look on LinkedIn and see like, okay, like how has their headcount grown, in the
mhm.
past couple of months? Like, are they really hiring? Are they ramping up? So those are the type of things you can look for.
What about like it's like earlier stage, like let's say they just finished like a seed investment or something. How do you, and then let's say the product was like unclear, or like there's like a significant way that the product could shift big time. And I wonder how do you kind of like evaluate these opportunities? Obviously, like it comes with major risk, but if there's no risk, there's like no return either.
Yeah.
So I wonder, besides like, some like signals such as like XYZ VC firm invest in them, like what can be like, I mean, obviously like these founders have to be really smart, or like having some sort of like technical edge to be raised from like a good VC firm. But I wonder, like, besides those, the technical ability, what are things that like maybe on the soft skill side or some other stuff like that you would think would differentiate a startup? And like, I don't know if you have interact like deeply with like the early stage startup, like very early stage, not like, Series B level, like what, you guys invest in at the very early stage. How do people like help a company succeed? Because I feel like it's a chaotic environment, and generally like nobody knows what they should do in general. I guess like how do you kind of like see the company that you invested in navigate through these like chaotic early moments?
Yeah, all great questions. And I would say when it comes to very early stage, the people matter so much. Like,
Mhm,
do you think you can learn a lot from your direct manager or from the founders? Like, are they experts? Are they people that you want to be around? Because most
mhm,
likely you're going to be around them more than your friends and family. And
mhm,
so you have to want to be in that working environment. I was, employee 10 of a GovTech startup,
mhm,
and
mhm,
part of the reason why I chose it is because they were solving a real need. They were basically automating City Hall. So instead of having
mhm,
to go to a physical building and spend hours of your life waiting to apply for, a business license or a building permit, you could do it all from your phone on the couch. And it would kick off the approval workflow with the municipality. And like, I'm just like, this needs to happen. The government is so antiquated.
mhm,
Why
mhm,
are we still using paper? Why do things take so long? Like, this makes complete sense. And so I thought it was a big mission and a real acute need. And I enjoyed the people that I met in the interview process. I think the founder asked me a really interesting question during the interview, and I was like, "Oh, okay, I kind of like the way you think," and I thought we, would enjoy working together, and so that's part of the reason why I joined. They were also a part of like all the top GovTech accelerators,
mhm,
and had a little bit of funding from top GovTech investors. But in terms of helping the company, it's really just wearing multiple hats and doing whatever needs to happen. And
mhm,
so for me, I came in to lead BD, but I ended
mhm,
up doing a lot of product work because as I was
mhm,
having conversations with customers, I would just listen to what their needs were. And I was like, okay, it sounds like this is a problem for you. It sounds like this could be a solution. This solution doesn't actually exist today on our
mhm,
platform,
mhm.
but we're gonna figure it out. I'm gonna work with our CTO. We're gonna like build it for you. And luckily I was able to get them to basically fund the development of that new portal. And so they were like,
Mhm,
"Yes, if you're able to solve this, we're happy to pay X amount of money to help you develop it, and then we'll like become customers of that new product." So it's just like
mhm.
looking for problems and then just trying to solve them.
Amazing. Okay, so I wanna be mindful of the time. I have a 1-minute fire round for you. Are you
Okay,
ready?
let's
Okay.
go.
What's your favorite book?
My favorite book. Ooh. I would say venture deals. It was
Uh, who would you invite to your dinner party?
Barack Obama.
Uh, who made the biggest impact in your career?
Ooh, in my career, Tyson Clark from GV.
Uh, who would you invite? Who would? Where can we find you outside of work?
You can find me at the gym or at the park.
I like that. Amazing. Thank you so much, Stanley, for coming on the show today.
Yeah, thank you. I had a great time and really appreciate having a chance to talk with you.
Amazing. Okay.